The hidden costs of buying a home in San Diego in 2024. Let's talk about that. If you are new here, welcome back to my YouTube channel. I'm Chris Spade at Keller Williams Realty, where I make all these videos to help you make sense of the real estate market. If you would do me a huge favor, please click the subscribe button. Also click that little bell so you can be notified every single time we drop fresh new content. Also, if you find value in this video, please give me a thumbs up, share it with somebody you know, and then comment and tell me what you think. Now, the reason why I want to make this video is to help you identify some of the overlooked costs when it comes to buying a home and the things that you should be looking out for and some of the things that you probably didn't think of. So let's get to it. Let's talk first about closing costs. So what exactly are your closing costs? These are going to be your lender fees that you are going to be paying when you buy a home. And typically, your lender fee is going to be approximately 1% of the overall cost to get the loan. Let's break this down into very simple terms. Let's say you're buying a house for $700,000. And let's say you're putting $100,000 down. That means your loan amount is going to be $600,000. So you are going to pay up to 1 point to get that loan on the $600,000. So $6,000 would be a part of your closing costs. Now, some other closing costs you're gonna have to pay is insurance, which we'll go over in a little bit. Plus, you're gonna have to also pay your title fees, your escrow fees, and those are all based on the purchase price of the property. So they are a percentage of the purchase price of the property. So I always give people a general rule of thumb. Let's say you're buying a house for $700,000. Your closing costs are going to approximately be 2 to 3% of the overall purchase price. I would budget for the greater and budget for 3%, which would be $21,000. But typically they can be massaged and you might get it down to about 2% of the overall purchase price. But just keep that in mind. That's going to be in addition to your down payment that you're going to have to come up with. I always get this question a lot from people about the earnest money deposit. That's not extra money that the seller gets. That's actually your money that gets applied towards the down payment of the purchase of the property, or that can go towards the closing costs, whatever that is. So on this $700,000 example, that means that $7,000 earnest money deposit, it's typically anywhere between 1 and 3%. Let's say it's 1%, it's $7,000, 2%, $14,000, and 3%, $21,000. That goes towards your down payment or your closing costs. It can be applied towards whatever, but it's your money. It's not extra money the seller gets. Let's talk property taxes in San Diego County. Now, you calculate your property tax bill on the purchase price of the property, which is 1.25% of the overall purchase price. So approximately $700,000 purchase is going to mean about $8,700 in property taxes. So you just want to budget that. Now, as part of your closing costs, the escrow company is going to collect taxes on the purchase as part of your closing cost. Now, those taxes are going to be based on the current assessed value of the property, meaning what the seller's been paying in property taxes. So say, for example, the property tax bill for the seller is only $2,000 annually. That means they're only going to collect the taxes from the date that you close escrow until the next fiscal cycle based on what the seller had been paying in taxes. Now, about 9 months after you close escrow, you're going to get something called a supplemental tax bill. The supplemental tax bill is a one-time hit that you're going to get, and that's going to be the difference from what the seller's tax bill was and your new tax bill. So you're going to have to pay that delta. It's going to be a one-time hit. Your tax bill, when you get it, is going to be green. When you get that, you have to pay it. Now check with your lender. They may have been impounding enough property taxes to pay that supplemental tax bill. But if not, you are responsible for paying that supplemental tax bill. So you're always going to want to put that back. So if someone has owned a home for 50 years and they've only been paying like $400 in property taxes, that means the escrow company is only collecting that much in the taxes, and that's what's being reported, but you're going to get your supplemental tax bill and you're going to have to pay that. So that bill is going to be quite substantial if you're buying a house from somebody who's owned that property for, like, let's say 50 years. Homeowners insurance. It is the bane of most home buyers' existence that you have to have homeowners insurance, and that is because the lender is going to require it because they want their investment insured. Because remember, the bank is paying off the mortgage of the previous owner and they are lending you that money, so they want to make sure if anything happens to that house that they can reclaim their money. So homeowners insurance becomes very important. Now, you may have seen in the news lately that there are multiple insurance companies that have backed out of California, Allstate, State Farm, and a bunch of others nationwide. They don't write policies in California. So I always tell people, if we are close to getting an offer accepted, start making phone calls right away to start working on getting your homeowner's insurance. That is so important because you need to have homeowner's insurance. Now, the state of California offers homeowner's insurance. It's very expensive, so it's better if you can find homeowner's insurance that isn't part of the state of California insurance policy. We've got great brokers that we can refer you to that will broker it out, but it does take a lot longer. Where in the past it took like a week to get homeowners insurance, now it takes a lot longer. And insurance rates, insurance premiums, they've all gone up, so that's another thing you're going to have to budget for. Let's talk a little bit about maintenance and repairs. Now, if you're buying a condominium, you're responsible for everything that's walls in, and in some cases you might be responsible for what's behind the walls as well, if there's any sort of leaks or you've caused any leaks or damages. So maintenance and repairs, this is something you're going to have to budget for. If you're buying a single family detached house, you're going to have to be concerned with things like the roofs, the sewer system. Is the refrigerator going to go out? How old is the refrigerator? How old's the washer and dryer? There's going to be all these things that you never thought about. The garage door going out, the garage door opener, the garage door opening system going out. These are all things that you're going to have to think about. It's always good to have some sort of slush fund that you can dip into in case there's any maintenance that you have not expected. So just keep that in mind. Maintenance, repairs, those are all going to be things. And then if you want to hire anybody to do work around your house, such as gardeners or landscapers or anything like that, those things you're going to want to budget for. You might want to have an annual termite contract where they come out monthly, spray around your house, and then, every so often you get your home tented for termites. These are all things that you might want to budget for. You might not want to budget for, but just kind of keep that in mind. Let's talk about homeowners association fees, the bane of my existence. Homeowners associations, if you are buying in an HOA, then you are going to have to pay that monthly maintenance fee every single month. I highly recommend that you put it on autopilot and just set it and forget it. But it's also highly recommended that you be very involved in the board and with what's going on. Before you're buying a house in an HOA or a condominium or a detached house in an HOA community, make sure that you read the HOA documents. That's the one thing that we're not allowed to read. You want to make sure that the reserves have enough money in them. You want to look at the budget. You want to find out if there's going to be any special assessments, what the PEP policy is. These are all important things, but the HOA fee you're going to want to look at. A good HOA should be at least 70% funded. That's a good one. If you have anything less than that, you have to be a little bit concerned because there might be an assessment. Now, a special assessment is where the HOA determines they don't have enough money for a capital repair, like, for example, a roof or an elevator repair, that you're going to have to participate in that repair, which means that you may have to come up with that money up front. Or if it's something where they say, you know what, we're going to need to replace the roof in 2 years, so we're going to have a special assessment and we're going to attack that special assessment on top of your regular HOA fees. So if your HOA fees $500 and they want an extra $200 a month, they're going to tack that on. Now your fees go up to $700 to boost those reserves, so that way they can pay a new roof. So you just want to double check, and all lenders are going to calculate in your HOA fee into your debt to income ratio to make sure that you can actually qualify for that property based on the HOA fee of the unit that you're buying in. Let's talk utility costs for just a second. So if you've been living in an apartment your whole life or doing rentals, and all of a sudden you decide you're going to buy a single family detached home and you're going to have to pay a few more utilities. So you're probably used to paying your SDG&E bill and your cable bill, but guess what? You are going to have to pay your water bill. Now the good news is that in most cities, your trash bill and pickup, that's all covered by your property taxes. So like in the city of San Diego, if you you are buying in San Diego, that's part of your property taxes. But in other cities like National City, you have EDCO that is servicing the city to come pick up the trash. So that is a separate bill altogether. So you're gonna have to budget and pay for things like that. So just keep these things in mind, that this is just kind of like a general overview of some of the hidden costs of buying a home in San Diego in 2024. Let me know what you think. Did I forget anything? Please comment below. Also, don't forget to subscribe, like, share, and comment. Thanks so much, and I'll catch you on the next one.